Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines this afternoon. The Nifty hovers around the 10,500 mark as banks rally and outweigh metals decline.
Aluminium makers are the worst hit in trade today after US softens its stance on Rusal, sending metal prices tumbling.
Open auctions may fix the unruliness in the insolvency and bankruptcy process, says JSW Steel's Managing Director Seshagiri Rao. That's a Bloomberg Quint exclusive.
And Reliance Jio adds the highest number of subscribers in over a year. Idea Cellular beats Airtel to the second spot in February.
All right, all those stories coming up here on Power Lunch. But as always, let's take a look at the markets. Yatin Mota joining us with a check on how things are faring. Yatin.
So we are at the day's low and, hovering around the 10,600 mark. Some bit of selling pressure seen at higher levels. We are looking at some supply levels coming in on the technical basis, according to analysts. But we have Yes Bank as well as ICICI Bank, so the private sector banks gaining smartly on the Nifty. Of course, we also have big boy Reliance Industries doing well in trade. Of course, all eyes as we have this company also nearing that $100 billion market capitalization. Of course, we are almost 6-7% away from that mark, but all eyes on Reliance Industries for that reason. Metal stocks are down in trade, so we have Hindalco, Vedanta, Nalco, all of these aluminum stocks declining in trade. Of course, this is to do with overnight decline in the aluminum prices. Also, we have some IT stocks, the likes of Wipro and Tech Mahindra declining by over 2-2.5%. If you look at the mid-cap end of the market, also quite active. So we have stocks like Reliance Communications, GMR Infra, JP Associates, all of these stocks gaining in trade. Also, we have Biocon in the pharma pack doing well along with Dr. Reddy. So on the broader side, we have a slight bit of disappointment on the market breadth, but some select mid-caps are doing well in trade.
Yatin, thank you for that. US 10-year yield stopped just short of about 3% in trade on Monday, the highest in the past 4 years. The dollar too climbed to a 3-month high as investors prepare for a higher rate regime. This could have implications for global equities too. JP Morgan and Macquarie expect the rising yields to cause pain for stocks as they seem too expensive for now. Meanwhile, in the commodity space, oil climbed to a 3-year high, but UBS isn't worried as they expect a 10% slide in oil over the next 1 year. Listen to what brokerages had to say on global markets, equities, fixed income, or commodities.
Thing that everyone's trying to grapple with is if it does go through 3%, how quickly may it ascend to 3.5%, say, or 4%? For us, it's a little bit different to that. It's the reasons why we're seeing that 3-year yield move. It's about better growth outlook, a little bit more inflation, and the faster rate hikes being priced in by the market. You're seeing the 2-year and the 5-year move as well. So on the back of that, you're actually seeing a growth outlook that's very well, and we're seeing that reflect in the earnings season that's coming through in the US. And so, yes, those higher yields should feed through into higher borrowing costs and perhaps create some pain for equity markets eventually, but we're not at that point yet. And I think it should be reaffirming the fact that we do see a global economy that's looking relatively healthy.
If we reach WTI levels as where we are now, the shale producers would come back, and in fact we are seeing them coming back. Also, if you look at how the market is positioned, specs position certainly more on the long side could also be a bit of a squeeze. So yes, I guess we need some clarity about the Iran and the sanctions in particular, maybe Venezuela as well. But nonetheless, I mean we are no longer in this undersupplied situation that we found a couple of months ago. So we still think that maybe if you go on a 12-month horizon, maybe year-end, we have about 10% downside on oil.
The key level, to be precise, would be 3.05%. That was where 10-year yields were on the 2nd of January 2014. That was the peak of 10-year yields after taper tantrums which started in September 2013. So if that 3.05 were to break, then I think the next level to watch out for would be 3.25. And at that point, I do believe that there will be some adjustments in positions, bonds, as well as FX. Now, even as bonds were to sort of cheapen when yields were to break 3.05, then in relative terms, equities would look expensive as well. So there will be some market volatility for sure. And I think in the wake of all that volatility, dollar could strengthen.
JSW Steel is hopeful of rejoining the race for SR Steel. Speaking to Bloomberg Quint's Menka Doshi, Seshagiri Rao says fresh bids must be invited if the process has to be completely transparent. Listen in to a bit of that conversation.
When the 5 assets were available, we have prioritized 3 assets and we focused on the 3. All the 5 came together at the same time. So and bunched it together. We could not spend all our time in all the assets. So we focused on 3. So after having lost 2 assets and only secured 1, there was an opportunity which was again opened for Essar Steel because both the applicants were declared as ineligible for as a resolution applicants. So we also saw an opportunity for rebidding. Then we wrote a letter to the bankers.
They said no,
saying we should be permitted. We didn't receive any response. So in the meantime, New Metal approached us whether we will be able to.
So New Metal says you approached them, but anyways.
They approached us. That is what I am saying officially.
Okay.
They approached us whether we will be able to partner with them as an investor. So we agreed to do that. So accordingly, in the second round, we submitted our bid. But there are few points which I would like to mention is that we made a request that in order to be transparent process, they should allow even the new entrants in the bidding. Thereby more number of people can come in and the lenders can get a better value by permitting new people. But now I think NCLT judgment, if somebody reads, they are confirming what the view JSW Steel expressed initially, that they should have gone for option 1, where they should allow the new entrants also to submit the bids. That is point 1. Point 2, which we have been talking about, that the whoever is the resolution applicant, if there is a defaulting company for which he is the promoter, he should pay the dues before he becomes eligible. I think even this point is being corroborated by the judgment of the NCLT. So now again, when we read the judgment of the NCLT, so they have been highlighting the point that option 1 could have been a legally transparent way of doing it. So there could be a possibility that fresh bidding can come in Essar Steel.
Well, you can catch the entire interview at 1:30. That's Seshagiri Rao only on Bloomberg Quint. Meanwhile, the decision on whether to invite fresh bids for Essar Steel can be expected as early as today. The Committee of Creditors meet today after NCLT asked them to reconsider New Metal and ArcelorMittal's resolution plans. If they still find the bids ineligible, the NCLT has suggested that the resolution professional initiate a new process that's open to all. Vishwanath Nair has been tracking the story for us. Where does this go ahead?
So today's meeting is essentially a stock-taking exercise because what happened is the order was passed on Thursday, but it was only over the weekend that the written order came up on the website. So, everybody had access to what the NCLT actually said and not just the word that was spoken in court. The lenders will be looking at all of these words and trying to figure out, what they want to do with the case, whether they want to follow the NCLC's instructions and take up ArcelorMittal and New Metal's, bids in the case and try and reassess the bids, whether they want to do that at all or whether they want to challenge the NCLT's decision at the NCLAT, which is the appellate tribunal in this case. This is something that the lenders will be discussing. There's also the matter of JSW's bid. So we understand through some other media reports that JSW has written to the lenders in this case, asking them to allow them to bid. Of course, all of that will depend on what lenders come to as a conclusion in today's meeting. That's what we'll know.
All right, Vishnu, thanks so much. We'll wait to see whether anything comes out of it or if it's just a stock-taking meeting, as he said. Let's move on to global news. Even as Donald Trump's trade spat with China continues, India is doing everything to ensure that it's not collateral damage. The government plans to buy more oil, drones and aircraft from the U.S. to help narrow its $28 billion trade surplus with the U.S. Archana Chaudhary of Bloomberg News joins us with more. Archana, what have you picked up? This again comes at the backdrop of the U.S. saying that India could be on the watch list, or India is on the watch list of countries which may be manipulating or at least attempting to manipulate its currency.
That's right, Ira. So essentially what we are seeing is across ministries, India is looking at how they can buy more to essentially cut this surplus that the Trump administration seems to be pointing out across various, trade with various partner nations. And as far as India is concerned, the officials have been telling us that it's not like the trade surplus was higher because India didn't want to buy from the US. Most of the problem was because the US wasn't really selling things that we really wanted from them. one of the things that we really wanted to buy from them was oil, because 80% of our oil is imported in any case. So as long as we can buy oil from them or gas from them, natural gas from them, at market rates, India is willing to do that. And if that is obviously going to help cut that trade surplus, which is one of our, one of the bones of contention as far as US is concerned.
Archana, we leave it there. Thank you so much indeed for joining us with those details. Aluminium prices dropped the most in nearly 8 years on the London Metal Exchange after the US softened its stance on Russian aluminium giant Rusal. The Treasury Secretary, Steve Mnuchin, added that the aim was not to shut down the world's largest aluminium maker. Jody Schneider of Bloomberg News now joins us from Hong Kong for more details on this one. Jody, thanks so much for joining in. What prompted Washington to soften its position against Rusal?
Well, basically, Washington was aiming to send Rusal a lifeline. They did not want it to think that they wanted it to collapse. So this was an attempt to give them some extra time. It doesn't necessarily mean the policy changed that much, but more that they didn't want to see a collapse, and so it kind of extended an olive branch, if you will, particularly the extension of time.
How have markets reacted, Jody, especially aluminum prices?
Well, aluminum, first of all, Rusal shares in Hong Kong sank to a record low last week. They surged as much as 37% today, so that was their biggest gain ever. Aluminum prices headed in the opposite direction. They were down 0.9% in London, extended Monday's slump another 7.1%, which was their biggest drop since 2010. So we've seen aluminum prices go the other way than Rusal shares in the short run, at least. The speed of the reaction showed how far sanctions have roughed up the aluminum market, certainly in recent days.
All right, thank you so much for that. Let's move on and come back to India. The incumbents are trying hard to keep pace with Reliance Jio, but with little luck. The country's youngest telecom operator added nearly double the number of new subscribers compared to its closest peer, Idea Cellular. Somit Sarkar is here with a breakup of the data that TRAI put out for the month of February. Somit.
So if you see the active subscriber base for Reliance Jio, it has remained healthy at around 86%. Now, though this is below than what the larger incumbents have, that is Bharti Airtel, Idea Cellular and Vodafone India, but it has been increasing for the company. From the lows of around 71.2% in April 2017, it has now increased to close to 86% as of Feb 2018. Now, if you see the subscriber addition in the month of Feb, it has remained healthy for all the operators. Now, Jio added close to 87 lakh subscribers in the month of Feb, which is the highest done by the company in the last 12 months. Idea Cellular added close to 44 lakh subscribers in the month of February, which is the highest in the last 16 months. Now, Vodafone, which will be merged with Idea Cellular, added close to 32 lakh subscribers, while Bharti Airtel, which is the largest telecom operator in India, added close to 42 lakh subscribers in the month of Feb. Now, the telecom industry as a whole added close to 49 lakh subscribers, and among the smaller players, other than BSNL, none of the operators were able to add any subscribers in the month of Feb. Now, if you see the market share, Reliance Jio market share increased the most. It increased by around 70 basis points. It increased from close to 14.6% in Jan 2018 to 15.3%, while that of Bharti Airtel, Vodafone India and Idea Cellular increase in the range of 20 to 31 basis points. Lastly, if you see, there are currently now 4 operators that are on the verge of shutting down their operation. That is Reliance Communication, Tata Teleservices, Aircel and Telenor. Now, all these 4 operators have close to 15 crore subscribers, which is close to 13% market share that is available for grabs for the other bigger operators in the industry.
Okay, hold the thought. We're talking about Bharti Airtel as well. Bharti Airtel is expected to report a loss in the 4th quarter. This is the country's largest telecom operator. They will be bearing the brunt of increasing competition and drop in termination or international termination rates. Somit standing by to tell us what, Jio's gain is really Bharti Airtel's loss, it seems. Somit.
Yes, I'll start off with the headline numbers first for Bharti Airtel. Now, if you see, the 4th quarter is expected to be weak for Bharti Airtel. Revenue is expected to be down by around 2% to close to 19,800 crore rupees, while EBITDA is expected to decline by around 7% to close to 7,000 crore rupees. Now, this revenue decline will be for the 3rd consecutive time, and EBITDA is expected to decline for the 7th consecutive time. Now, margins are expected to decline by around 170 basis points to 35.1%. Now, if you see, the company is expected to report a net loss for the very first time in the last 60 quarters. Now the net loss is expected to come at around 25 crore rupees, while ARPU, that is the average revenue per user, is also expected to decline for the 7th consecutive quarter, and in this quarter it is expected to come in at around 115 rupees per user. Now, what led to such a weak quarter for Bharti Airtel? Now, it's the tariff cuts and cut in an international termination rate and ARPU downtrading. Now, in the 4th quarter, Jio had cut its tariffs twice in the earlier month, while the international termination rates were cut by around 30%, by 43% to 30 paise per minute, and subscribers chose lower ARPU plans, which led to ARPU downtrading in the 4th quarter of financial year 2018. Now, for Bharti Airtel, its African operations are expected to remain healthy in this quarter also, and the data consumption, which has been the key thing for all the operators, is expected to increase for Bharti Airtel in the 4th quarter of financial year 2018. Now, key things to watch out for in this earnings would be, firstly, the capex plan for the company, that is for FY19. What is the capex plan, how they're going to fund it, and what will be the leverage ratio of the company. Along with this, the timeline on the recent acquisitions that the company had made. Along with this, there management commentary on further stake sale in Bharti Infratel and its DTH business, and their outlook on the Africa business of Bharti Airtel. And lastly, management commentary on Jio's aggressive tariff plans that we have seen lately in the industry.
All right, Samit, thanks so much for that. Infosys' new CEO has laid out his strategy for the company, and he's willing to make the gradual transition to digital services over the next 3 years. Agam Vakil is standing by with the big takeaways from Salil Parikh's meet with analysts yesterday. Agam.
Sure. So they started off by talking about the opportunity that the digital services arena offers, and they addressed that, said that the market size is about $160 billion, and it's also growing at the rate of high double digits on an annual basis. That said, in terms of strategy, they spoke about areas that need to be addressed, and among those were digital core, talent and sales, which is why they have also outlined their plans with respect to 4 pillars that the management has briefly spoken about in the last 2 quarters. So they were talking about scaling agile digital services, energizing the core services, reskilling their employees, as well as expanding localization talent, especially in the US and other important markets. That said, the management did speak about modernizing legacy systems, especially given the fact that a bulk of their revenue still comes from your traditional businesses. And the company is also undertaking about $100 million worth of investments, and which will help them carry out their plans for the future. In terms of timelines, the company is working with FY19, where they're looking to stabilize the business. FY20 will be the year when they start building momentum, and FY21 will be all about acceleration of the services that they offer. But on the whole, this is how they intend to carry out their plans, and of course digitization will be at the center of all their plans.
Agam, thank you for that. Pramod Gubi of Ambit Capital is bullish on the IT sector in an interview earlier today. He said both macros and micros have lined up in favor of technology companies. On consumption stocks, he's not as positive, as valuations he believes are expensive. Listen into a slice of that conversation.
We've talked about IT as a theme for the last 12 months. It's clearly played out very well, and it's also coinciding with both the macro and the micro lining up quite nicely. The macro in the form of US economy doing well, US earnings doing well, and with the tax cuts to boot, there is enough firepower amongst US corporates to increase their IT spends. And at the micro level, I think the last 3-4 years of investments that the Indian IT companies have made in terms of digital and so on is beginning to bear fruit, as we see in the commentary from the likes of TCS and Infosys, and add to it a tailwind on the rupee, in the form of rupee depreciation. I think that's a nice way to play this this whole theme.
Okay, Pramod. So one was this IT. I mean, last week we saw the return of. I mean, if it ever went away, we saw a return of the consumer preference or the investor preference towards consumers, and of all sorts, right? Alcohol companies moved up very, very strongly. We had some of the staples doing really well. ITC was a case in point as well. The market seems to be loving to reward consumption. Is it because there is lack of other options available, Or is it because the market believes that the earnings growth out here due to GST and other factors will be so strong that what is appearing expensive right now will start looking a lot reasonable in less than 12 months out?
Yeah, I think it's a combination of both. Certainly the spending ahead of the elections, both in terms of election spending itself and also the rural programs that the government has in place, could mean that at least consumption as a contributor to GDP growth will hold up, and also I guess it's a theme of a move towards quality. I think after the Feb March sort of correction, the return of the markets this time has been clearly towards quality, unlike what we saw, say, middle of last year, towards the end of last year. And once you shift focus to quality, you will end up in sectors like consumption, which tends to have a larger number of good quality companies. So a combination of the type of companies and the macro which is supporting investment in consumer. Yes, valuations are not particularly attractive, and even if you assume a fairly strong earnings growth, I don't think it is easy to justify those sort of multiples. I think what underpins these sort of multiples of valuations is the longevity of this growth. I don't think anybody would argue, given a billion plus people, consumption will be here to stay, and to that extent you are trying to factor in not just high growth but also prolonged high growth for many of these consumer companies, and that's perhaps the way the market justifies the high multiples.
Google CEO Sundar Pichai is about to have a very big payday, about $380 million worth. Months before a promotion 4 years ago, he received a block of 354,000 restricted shares. On the 25th of April, these shares will vest, giving him a windfall of about $380 million. That's the most he's made in his career. Alphabet's shares have risen about 90% since the award was granted in 2014 when he became Senior Vice President of Products. While a 9-figure payout may seem like a lot, it won't break any records. Many other tech titans like Zuckerberg and Elon Musk have made much more.
But that comparison is not right, because Elon Musk and Zuckerberg are promoter owners.
Promoters.
It's one of the most recognizable brands in the world, but what gives Nike's designs the edge? This video tells you the radical architecture that gave a designer Nike's most iconic sneakers. Take a look.
The design of this shoe starts in Oregon in 1981, and with a man called Tinker Hatfield. He was an architect for Nike, hired to draw up offices and showrooms on the company's campus. After making a statement on the outside of the buildings, he was asked to join the designers on the inside. In a race to develop sneakers, a former NASA engineer had recently introduced the idea of sealing air bubbles in the soles for extra comfort and performance. But competition was fierce, and Nike still needed an edge. Hatfield headed to Paris in search of inspiration. While he was there, he visited the Pompidou Center, a radical building famous for its inside-out design, which exposed the building's components, like escalators and heating pipes, for everyone to see. Hatfield decided to apply the same principle to his own design, revealing the inner workings of his shoe by making the air cushioning system visible. The marketing team thought the air bubble would seem like a weakness, but the Nike Air Max 1 was an instant hit when it launched in 1987. Originally, pairs sold for $75. Now they go for double that. Today, Tinker Hatfield is one of the most successful shoe designers in the world. He even created those legendary self-lacing sneakers of Back to the Future fame. Stylish and innovative, this is the design that stayed one step ahead, simply by being turned inside out.
Coming up next, Seshagiri Rao of JSW Steel speaks about the company's plans with Monnet Ispat, its hope for SR Steel and more. That's coming up on the other side of the break.